The time has come for me to say bye-bye Vanguard and hello Trading 212. We're less than 2 weeks away from the end of the financial year, so that means you need to decide where you're going to invest your ISA allowance in the tax year 21-22. Knowledge. If you're not sure who you're going to use, or you're not sure how or why to start investing in an ISA, I'm going to take you through why I invest in an ISA and why I am changing from investing in Vanguard to investing in Trading 212. My name's Dav Morse. I'm here to help you make the most of your money, to live generously and impact the world beyond just yourself. Now, a few years ago, I came across a podcast called the Choose FI podcast. And every week I would tune in and be seduced by the allure of this magical life that was awaiting once you could retire from your working life and you could live the life of your dreams. And the way that they said to do it, the best way to do it, was to invest in Vanguard index funds. Now, immediately I thought, I need to check this out. I need to start learning about Vanguard index funds. So I set up a Vanguard ISA and started investing in some Vanguard index funds. Now, here in the UK, we have a wonderful product called an ISA, an individual savings account. Now, into that ISA, you can save up to £20,000 per year tax-free. Now, what that means is once you put it in there, it can grow and it can collect dividends, and you never have to pay any tax on any of the growth or any of the dividends whilst it's in the ISA. And when you take it out, there's no tax to pay. So most people would say that saving and investing is a good idea. But in fact, saving is an absolutely awful idea. Every year you're saving money, you're actually becoming poorer because of inflation. Inflation is eating away at the value of the money that you're saving. That is the topic for another video. So we're left with investing. Now, it is the absolute best idea for most people to be investing in index funds and to forget about it and let compound interest do its thing, increasing your money. I've already made a video on how to set up a stocks and shares ISA, why you should set up a stocks and shares ISA, and what is an index fund and why maybe it's a good idea for you to be investing in index funds. I had that with Vanguard. I had a stocks and shares ISA. I was investing into index funds for many years. I had a personal rate of return of 45.5%, which is absolutely fantastic. So why am I leaving Vanguard? Why am I leaving that behind and changing to Trading 212? So the first thing I should say is you cannot pay into two stocks and shares ISAs with two different providers. You have to just pick one for the financial year. Now, the good thing is you don't have to close your old ISAs. So I'm going to keep my Vanguard ISA there. I'm not going to pay any more into it, but I'm just going to let it grow, let it do its thing over time, let compound interest make more money on the money that I've got in there, and just leave it alone. It's a good idea to have more than one place to keep your investments because of the Financial Services Compensation Scheme Protection Limit. What is the FSCS protection limit? Well, it means that if the provider that you have, so if Vanguard or Trading 212 or eToro or FreeShare or whoever you are investing with, if they go bust, bankrupt, then they will protect your deposits up to £85,000. If you've got more than that in there, so if you've got £90,000, £100,000, more than that, then you're not going to be protected for the full amount. So if you've got more than that amount of money, it is worth having more than one provider so that you can split that up, because you get the £85,000 per provider. So if I've got £90,000 with Trading 212, then if I split it to 45,000 and 45,000, then I've got no risk of losing the money if one of them goes bankrupt. The FSCS will protect the first £85,000 worth of your investments. Now, that limit was upped to £85,000 on the 1st of April 2019 from the previous value of £50,000. And before that, in 2010, it was £48,000. Now, I would imagine that eventually, as the years go on, they will increase that limit again. But there's no guarantees. So if you've got a pot of money which will grow to be more than £85,000 before you need it, then it might be worth thinking about opening another account. Now, at the moment, with Vanguard, I am nowhere near £80,000, £85,000, but I do know that if I leave it there for long enough, it will hit that £85,000 before I need to draw down on it. So that's one of the reasons that I am opening up a different ISA with a different provider. Second reason why I am choosing to start with Trading 2 and 2 is because at Vanguard you only get access to Vanguard funds. So that means you can't invest in individual companies, you can't invest in anything other than a Vanguard fund. So with Trading 2 and 2, that just gives me a few more options, because you can still invest in Vanguard funds at Trading 2 and 2, so I won't be missing out. It's just that I've got more options available to me then. That brings us to point number 3. Why would I need the option of buying individual shares when I know that I'm just going to be buying index funds and setting it and forgetting it and letting compound interest do its thing and not trying to beat the market?
Why do I need to bother with individual shares?
Well, it comes down to the most important thing about investing, which is knowing yourself. Knowledge. Knowing yourself and what stage you are at in your investing career. Now, if you're a beginner investor, I would absolutely advise... Actually, I can't advise. I'm not legally allowed to advise you. This is not financial advice, but if it was financial advice, then I would say buy the index fund. If you're a beginner, it's definitely worth watching my video on index funds, but where am I in my journey? Well, I am trying to grow in my knowledge. I'm trying to understand more about what makes a good company, finding out what companies might do better than others, why they do better than others, learning all the time. I'm at the stage in my investing journey where I've been investing in index funds for a while, and I'm ready to take more risks with my money. So I'm ready to take more risks for higher reward. So that does mean individual stock picking. Now, I'm not pretending that I'm going to be a genius at this, but I am keen to learn, I'm keen to develop myself personally. Knowledge. Maybe it'll be fun to watch along, see how I do. Don't know. Maybe not. Because of that foundation of building up a base level of knowledge and a base level of money which will grow over time, then I am ready to take more risks with my money and hopefully with the potential of higher rewards. Now, if you think of individual stocks, then there's a lot of chance that your investment could go to zero. You could lose a lot of money doing that. But if you pick a good investment, then it could outweigh all the losses. That's what angel fund investors do. Startup investors, they invest in 20 or 30 different companies knowing that 25 of them might just completely go to nothing, 4 of them might get their money back, and then 1 of them might make up for all their losses on the other ones. So I hate it when people say,
oh, if you'd only invested in Tesla 10 years ago, then look at you now, you'd be a millionaire. Or if you bought Amazon and Google right at the beginning, then you'd be a millionaire by now.
It's not very helpful, but having that potential excites me. If I end up not outperforming the index and having more fun doing it, then there we go. Not investment advice. Hedge fund managers have got massive, massive informational advantages over retail investors like you and me. But one thing that hedge fund managers don't have is time to let their stocks that they pick grow. They have to be accountable every quarter to saying, have you met the growth this quarter? Have you met the targets this quarter? So if you've got enough time, then potentially that is one advantage that you may have over the hedge fund managers. So knowing where you are on your journey is important. Are you just starting out? Are you starting out later in life? Are you starting out with nothing? Are you starting out with a little bit more money behind you maybe? You're ready to make a few more speculative investments. Do you want to learn? Some people find this really boring. Hopefully not if you're watching this video. But if you do find it really boring, then just get an index fund and forget about it. Don't worry about learning about all this new stuff. If you find it interesting, then maybe the knowledge and the information that you get is the cost of getting a lower return. And that's fine. That's part of the fun, that's part of the game, that's part of the hwyl, we say in Welsh, of investing. Fourthly, a super important part of the choice of these two providers, Vanguard and Trading 2 and 2, is the cost. They are the cheapest of the cheap out there in terms of investment platforms. Vanguard have got a platform fee of 0.15%, which is super cheap, and then on top of that you get individual fund fees. The funds that I've shown in the video that I'll link below range between 0.06% and 0.16%, so you're looking at anything between 0.2 and 0.3% per year as a platform fee. With Trading 2 and 2 there are currently no fees, but as of the 1st of April they are bringing in a 0.15 foreign exchange fee. So if you're investing in a currency that is not pounds, your native currency, then you will have to pay that 0.15% on trades for foreign exchange. Having spent the whole video talking about why I'm moving to Trading 2 and 2 for my ISA, unfortunately if you haven't already got a Trading 2 and 2 account, you won't currently be able to open one, unfortunately. We don't know when Trading 2 and 2 might be starting to open up to new customers again, but currently it is not possible to open a Trading 2 and 2 account. Maybe Vanguard is an option for you, or maybe Freetrade is an option for you as well. So who are you going to choose for your ISA allowance this next tax year coming up? Let me know in the comments below. Till next time, peace out.